Eric, I've just summarized the kind of activity we saw play out on Friday's session over in Kenya. Run us through what you're making of the current markets picture.
Well, we are seeing quite a bit of activity, but generally, for the Friday session in particular, we actually saw volumes declining. Some of the key movers, we saw a bit of activity on thinly traded companies such as Access Kenya. Bamburi as well was actually also quite active. But we expect to see, the activity on the large caps picking up this week. And, a particular focus for us would be on Safaricom, which announces its results next month. So we'll just see how this turns out.
It's interesting that you've got your eye on a player like Safaricom, because looking through the headlines that have come through from Kenya this morning, we've got Bharti Airtel having to sell 15% of its stake in Kenya's second largest telecoms operator to a local to avoid getting into trouble with the regulators. How do you see a move like that shifting the current landscape within the telecom space?
Well, I think for Bharti it would be quite difficult. And I think that has been the debate. And actually the deadline of them actually disposing their shareholding to a local investor has been there for some time and extended. But they've been making losses. And, apart from Safaricom, the rest of the sector is actually loss-making. And, for us, I think that could set up the precedent as to what might happen on the largely awaited the mobile termination rates, which essentially could raise the calling rates across the Kenyan market in order to lift the other players out of loss-making positions.
We had question marks around the sustainability of Bharti Airtel's strategy when it moved into Kenya in the first place, and the sustainability of that model moving forward. And this obviously showing the kind of challenge that persists in terms of getting a strategy like that working for a company. What does this mean for Safaricom, a player that investors can invest into in the markets?
I think at the moment we think Safaricom is in very good shape, and the other players have lagged behind in terms of investment, and they'll have a very long way to catch up with Safaricom going forward, especially in terms of investment. The only way they could catch up is, they become profitable, and the only way to do that at this time really seems to be to have a higher tariffs going forward. If you look at the issue of actually reducing the rates in order to make sure that they have a lower cost, that's really not going to be sufficient. They can only save so much in terms of their interconnect costs. I think also the government is very keen to keep rates higher because, the sector, particularly Safaricom, contributes significantly in terms of tax revenues from corporate tax, excise duty, VAT, and more recently now we have an excess duty specific to mobile transactions. So I think on overall, the sentiment is that now we're probably moving into an area where we're actually going to see higher rates.
Eric, your view on a player like Kenyan Cobalt. This was a player that really came under pressure all through last week. We've seen the firm, see its share price drop 5.7% last week, and that on the back of poor results, which investors were certainly not happy with. And also there's some fatigue over the conclusion of a takeover deal by Switzerland-based Puma Energy.
Yeah, I think it's not surprising. I mean, Kenyan Cobalt has gone through various litigations in the past, and it appears even as it goes out, it probably go in the same way. Lots of litigations. Total last week, which was reported that they wanted preference in the buyout of a jointly managed depots, two of them, one in Nairobi and another one in Mombasa. But I think they're going to navigate it. I think the transaction could be delayed, but I think we are probably getting pretty close to the end now, where Puma Energy is actually going to take over the company.
Well, talking about M&A and transaction activity happening over on that end, TransCentury, which is an investment firm, obviously is seeking to sell its stake in Tanzania's tea packaging firm Chai Bora, and that as the company shifts focus to the infrastructure space, particularly investor reaction to that news that's come through and the refocus that the company is pursuing?
Last year, if you look at Chai Bora, it's a market leader in Tanzania in terms of packaging and blending of tea. But last year, actually, they saw a 9% decline in EBIT profits. And for them, actually, it always looked like an odd investment in their infrastructure portfolio. And that disposal really doesn't surprise us. It didn't look like it fit well into the overall portfolio of TransCentury. And I think now they're really going to focus on oil infrastructure, roads, water, power, and so forth. The investments will sort of tie into each other. I think really that's why they're looking to dispose of that investment.
A refocus seems to be on the agenda for Kenya Airways as well. We've had the aviation regulator having licensed KQ's low-cost carrier to fly 22 routes in East Africa, and many in the market saying that this clears the way for what's shaping up as a fierce battle of control of regional routes. How do you see this influencing or changing the fortunes of Kenya Airways?
This was really one of the main ideas that Kenya Airways had when it was coming to the market to raise capital, and really the low-cost carriers to ensure that it can compete effectively in this low-cost carrier segment as it emerges across the continent. And, we think it's a difficult one in coming, but, I think eventually they sort of have to move in this direction because they can't continue offering a full-service product, whereas you have new players, coming in and offering the low-cost product. And really that's where the market is. And I think really this is, they've said that they're actually going to launch before the end of the year, and I think this will be positive for the airline. I think the short-term challenges for the airline are very clear, especially with regards to the industrial action. I think the first half earnings will probably be quite disappointing, but I think longer term we like the name, and we think that they're probably going to get out of this.